Stephen's joining me here on Set with Business. We're going to talk Greece now, aren't we? Crunch meeting later today. Eurozone finance ministers focusing really on Greece, isn't it?
Yeah, that's right. And the Greek government is hoping to use that meeting to sell a 10-point plan to its Eurozone partners. The idea is to secure more time for Athens to negotiate a deal on its debt. The current bailout agreement is set to expire at the end of this month. Without some sort of new arrangement, Greece could find itself short of cash within weeks. The new Syriza government is hoping to secure an interim agreement to tide it over the coming months, as Catherine Viette explains.
Sticking to its guns, the new Greek government is set to present its first concrete proposals as it seeks to renegotiate the terms of its bailout deal.
What are we asking for in this negotiation? Firstly, we ask for time and space. The bridge program is exactly this, time and space. It is a short-term agreement that will help us meet our obligations until we reach a complete new agreement on cooperation and development within Europe.
Athens wants the European Central Bank to hand over 1.9 billion euros in profits made from Greek state bonds. It also wants permission to issue up to 8 billion euros in short-term debt as part of its bridge proposal. Calling 30% of the current deal toxic, Greece is hoping for smaller budget targets. It's asking for a surplus of 1.5% instead of the 3% Brussels has been demanding. It's also enlisted the help of the OECD to draw up a list of 10 alternative reforms. The new government is seeking debt relief too. 3 years ago, Greece brokered a debt write-down that shaved off 100 billion euros. Now it's considering debt swaps and wants to link repayment to annual economic growth. The EU has been quick to downplay expectations, saying a final deal will take time and most likely will not be reached at this week's meeting.
Going to put my sceptical hat on now, Stephen. What's the likelihood, though, of this plan actually being accepted?
Not great is the short answer to that. Germany, of course, one of the fiercest opponents to allowing Greece to renege on its previous commitments. At the G20 meeting in Istanbul, the German finance minister Wolfgang Schäuble was asked for his response to Greece refusing that final tranche of its bailout payments. Let's listen to what he had to say.
Good. We never imposed it. Refusing it is not a problem. But then, that's it.
Well, there you go, a fairly straightforward answer from the German finance minister there, saying that if you don't take this money, you won't be getting any other money. And the indications are that we're getting is that France could be more open to giving the Greeks some leeway, although it's not clear exactly to what extent that would make a difference. More headway might be made on the sidelines, though, of other European meetings scheduled. We've got the European leaders meeting, of course, coming towards the end of the week.
Markets being affected by this?
Well, in Europe here, we've seen the markets opening fairly flat. So there might be some reaction later in the day as we get an idea of how optimistic or not we should be about a deal from that Eurogroup meeting. In the United Kingdom, shares in the broadcaster Sky down 4.7% at the open after they announced a new deal for rights to Premier League matches for £5.1 billion sterling, or around 6.9 billion euros. Sky's paying 83% more than it did 3 years ago. Investors clearly not impressed with that price increase. Over in Asia, it was a quieter day on the markets. Japan is closed for a public holiday. Here's how things are shaping up on the other bourses. The Chinese markets focusing on comments from the central bank there about possible new stimulus. Let's move on now to look at some of the day's other top business stories. And Apple has become the first company in US history to finish a trading day worth more than $700 billion. That's nearly twice the value of the next biggest company, that's the oil giant ExxonMobil. Apple shares finished the day on Wall Street up 2%, giving the iPhone maker a value of more than $710 billion. The plunging value of the ruble has sliced some 300 million euros from brewer Heineken's earnings. The Dutch group says the Russian market remains challenging because of increased regulation on alcohol sales there. Overall net profit of the group rose 11% in 2014 to 1.5 billion euros. And the oil services giant Halliburton is to cut 6,400 jobs hurt by the massive fall in oil prices. The cuts represent 8% of its global workforce. Despite a 14% rise in profit in the fourth quarter of last year, Halliburton says it's facing a challenging market environment.
Now, don't they often talk about banks in Denmark, but we are today, because they're coming up with new ideas to deal with negative interest rates.
Yes, the Danish central bank is among those around the world that have cut their rates to negative, to minus 0.75%, in fact, in an effort to try and stimulate inflation and economic growth. But that's made things very challenging for banks, who, of course, make their money based on the interest that they charge people who are borrowing. So as those interest rates come down, one bank in Denmark has proposed, in fact, charging savers for keeping their money in the banks. This is the lender Erhvervs Bank, and they've announced they're going to charge interest to their customers who save with them. The company's chief financial officer, quoted as saying, is that paying customers positive interest is bad for profitability. So instead, they're going to charge a 0.5% rate to savers with the bank. Unsurprisingly, many people now withdrawing their money from those Danish banks. Danske Bank saying that one of the other big Danish lenders saying that if the situation was to continue, they may also have to do the same thing. But a pretty dramatic move in what's, I suppose, the model of a bank is you give them your money and they give you money back and with interest. But apparently not, at least with this bank in Denmark.
I've got some advice. Buy a box with some shoes in it. Take the shoes out. Stick your notes in the box.
Astonishingly bad advice.
Under the bed. Thing.
Well, we know where your money is now.
Oh, yeah, that's true. Shh, you don't know where I live, though. I hope. Stephen Carroll with Business on France 24.